What kind of volatility do you think we're going to see in the bond market in 2024? In 23, it was significantly higher than equities. Does that persist?
I do think we're going to continue to see elevated volatility in the bond market this year for a number of reasons. First of all, as you know, for a long time the bond market was incredibly suppressed, particularly by the central banks and having rates incredibly low, QE programs, and so for a long time volatility was very abnormally suppressed. We've seen a drastic repricing of that over the last couple of years. And now we're at the stage where we are seeing the major central banks, the Fed, the ECB, potentially the Bank of England as well, and maybe even the Bank of Japan, looking to actually change their policy ratings and pivot. So in terms of the US, the Fed, and the ECB in Europe, it looks like their next move is likely to be a cut in rates. In Japan, it's likely that they may exit the negative interest rate policy. So I do think we're going to continue to see more elevated volatility this year. Mm-hmm. And I think it's part of the normal process of, the economy getting back to normal, more or less, from very, very unique times during COVID, and then as we come out of that. And so I do think it's likely we'll continue to see volatility.
So what's interesting, though, is we haven't really seen the normal credit reaction to what you would have expected, right? So from a top-down, bottom-up perspective, what happens to credit? Because if things get bad, you would think you'd finally see a blowout in spreads, but you would have thought we'd have seen that last year. We didn't.
Yeah, so I think, again, there's a combination of factors there. So first of all, credit all-in yields is far more attractive now than it had been, in previous years. I think that's one. Secondly, I think there continues to be demand from investors for yield, for carry, and that will continue. And we still continue to see a lot of cash, on the sidelines or in money markets. And I do think that will start to shift out. We're seeing it move into equities, but we'll continue to see the flows into the bond market as well. We do have a lot of supply coming this year in the credit market in the US and in Europe, both in investment grade and in high yield. But, spreads aren't particularly attractive right now, as you say, but I think all-in yields are pretty attractive. And it's really looking at the underlying corporate bonds below them and looking at the opportunities and really getting at the dispersion between the individual issuers to get a very attractive portfolio in terms of carry, but also in terms of potential alpha as well.